welcome all to this webinar. Normally, my webinars have been around markets and stuff. So this time, I thought we'll make a bit of a change. And while doing so, markets have been volatile. So anyways, maybe we can take a question or two in the Q&A session on markets, but I think let's try and keep it, on this topic, which is an important one. Because I guess many of us have properties, and we are looking at both buying properties, we're looking at selling properties, and a lot of the time, we find that investors have already made certain decisions or committed to certain things, which are detrimental to tax saving. Okay, so I thought, especially if you have a large exit from a property, right? We will capture some of those thoughts and, what is it that we should be doing, if we are considering either a purchase of a property or a sale of a property. Okay, and those points is something that we will cover today. The agenda broadly is about, understanding what is the capital gains regime. Okay, how do you save tax? Okay, by reinvestment strategies. How do you optimize your tax, and as a result of that, also how do you increase your wealth preservation after you sell a property? And there are a lot of other points, interestingly, even though it sounds very, very simple, regulation, there are a lot of nuances which we need to sort of keep in mind, okay, while we look at, doing a transaction on a property side. The first question is, why should you sell your property, right? A lot of the time, I think our parents, etc., in the past generation have just, kept it almost like forever, right? And there's no need to sell a property a lot of the time, we think. But interestingly, we found that, as people come towards retirement, as people pass retirement, right, there are actions that many times we need to take because, you may have a fixed asset, but it's of no use if you don't, have the yield that you want to take care of your retirement, right? So, so a lot of the time, that is something that comes in. And we also, I think a lot of people also have tend to accumulate houses as they go through the years. And again, when you come, towards a higher age, you tend to look back and say, is my allocation good? Because, and many times you need to invest a lump sum, a larger lump sum when you're, looking at a property, and that sometimes increases the concentration towards real estate many times. And we've had a lot of examples where people have done a large purchase, and it's almost like everything is, towards, the house. You're leveraging even your, earnings and your savings sort of go towards your EMI in certain early years and stuff. And through that, you end up, having a very high allocation towards your house many times. At times, we are finding that people, wanting to move to a larger house, okay, sometimes moving city. Of course, we've had cases of people moving country as well, and even wanting to look at, another visa. So, and today you have opportunities to, invest into, visa with certain countries, and it is, basically a visa by investment schemes is, some of the countries have. And of course, I think not only financial crisis, but also where there's a need for something, okay, and that triggers, a sale of a property is something that we look at. And increasingly, we are finding that people, as they, get towards retirement or past retirement, you find that real estate actually takes a toll, taking care of all, the taxation and the changes that happen. And if you're letting it out, then tenants and then maintenance of the house and various things like that, and many times the yield on that property may not be very high, so for the yield, you end up, questioning, is that something that you need to do? In fact, interestingly, that is one of the things we also ended up doing, okay, because as part of my retirement plan that I had set for myself, when I put it down on sort of paper and said, okay, let me plan for retirement and early retirement. Okay, one of the things I did was to sort of invest into a property. In fact, one looked at it on an Excel, saying that, what is the ROI that it gave, looked at all the taxing or the rentals. Of course, one had some upside there because the interest rates came down from where I originally invested. Okay, and also property prices did well, but one found that a lot of every year the tenant would sort of move out, and then you need to go and search for the next one. Okay, at that profile, people are ending up buying their own house. Okay, so it was a real nuisance at some point of time, and purely because of simplification, I myself ended up letting go of one of our properties. So that is something to sort of keep in mind. And we're also finding a lot of the time, our children are sort of gone overseas, and it actually becomes a burden as well. Okay, and that is something, we need to sort of think through proactively and see how do we not lead ourselves to that. Okay, because we've had cases, when I went to the US, and I did a little bit of dipstick. What are their pain points? Interestingly, for people overseas, one of the biggest pain points was, how do I manage my property in India? How do I sell my property in India and get the money back overseas? So I think if it's a case where your children are not here, for example, that's even more reason why you should look at simplifying life, right? And I will also give case studies as I go along the way. And again, this is one of them that I know of, one of the elderly persons who was our sort of client, and she may be in her almost like her 70s. Uh, Her husband, who was a doctor, ended up, having a whole lot of properties, an estate, multiple properties, both in Bangalore and all over, multiple cities as well. And a significant part of this elderly lady's life was around, going and seeing how to settle all of those, how to sell the properties. All children are overseas. Okay, so she's alone here, and significantly working on simplification. So that's the point that I'm trying to make, and it's important for us to look at it. And importantly, I wanted to bring a new dimension which many of us may not have thought of. Okay, you can also save tax. And so if you're looking to buy a property, you need to ask yourself a few questions. Okay, so there's a lot more to cover as we go forward. So I will give that answer as we go forward in the subsequent slides. Okay, so I'll, we'll keep a little bit of inquisitiveness for you. Okay, and so coming to the point of what are the things that you need to keep in mind while you're selling property. Okay, so there are, I think, three dimensions. One is to look at on the property matters side, look at cost and tax implications and legal documentation. Okay, this itself shows that there's a whole lot of things for you to consider, and it's not necessarily going to be an easy one, right? So property matters, including looking at other market conditions, right, for real estate, and with respect to the market conditions, I need to also relook at what are my expectations and is that something that I would like. Okay. Now, one of the points that many times I think people tend to overlook at, and you have a price in mind. Okay. So, for example, I say that if I'm able to get above 1 crore, sorry, if I'm able to get above 1 crore, then I will sell this property. Okay. And the issue you have with that is sometimes I may get 95 lakhs as an offer. Okay. And I've seen people hold on to the property sale for maybe 2 or 3 years. What we don't realize is, had I been a little practical, maybe, I would have more than made it up. Okay, because in alternate investments there, even if I don't look at equity, even if I don't look at substantial returns, even if I look at a 7%, 8% type of return out there, in the example that I gave you, okay, within a year, it makes sense for you that you would have recovered it anyways. Okay, so I'm just saying, while you set your price expectation, be practical, look around, and then also say that, can I put this money to better use? Okay. The points that are important was the age of the building. As it goes beyond a certain age, banks don't fund it, and then a lot of people will come to you saying that, I can only give you cash to for part of it and stuff. And those are aspects: the age of the building, the size of the building, you know, or the plot. I have a client who has a plot of 25,000 square foot, and getting a buyer has been a task for the last maybe over 5 years. Okay, so that's something to sort of keep in mind. Even while buying a property, don't buy something which is, really difficult to let go, especially if you're looking at it as an investment. Okay, sprucing up the property is something that you may want to do. It's like you deck up the bride. Okay, so you get your property ready for a sale. Okay, is something you do, and also an important consideration, especially for us, is emotional readiness. Okay, and nothing to do with any financial matters. It may be a house that was my first house, and it's dear to heart. So some of those are aspects that you need to consider, and definitely, do something that you're comfortable with, but also look at the downsides of it while you make, weigh the pros and cons. Right. The second part of it is looking at the cost and tax application implications, right, from capital gains to real estate, agent fees, and thing, and look at all the expenses and say, okay, this is the net amount that I'm sort of likely to get. Study income tax exemptions, and what is it that sort of one can do. And many times, like I said, there are a few things that you need to do before. Okay, if you have to, take advantage of certain considerations. The last is about legal and documentation, and I'm not going to go too much into it, but I think a lot of the time we don't pay sufficient attention to it, and we regret later. So the point is, I think this part of it, I think there are better experts around there, but I just wanted to emphasize that, don't miss it out. Do take legal opinions. Many times we try to, optimize on costs, okay, and we sort of suffer later. So I think it's good for you to take a good legal advice as and when you can. Okay, so coming back to, what are the capital gains taxes there? Okay, so when you sell a property, basically it's called as capital gains. Okay, so what is the basically for capital assets, and what are capital assets like stocks, bonds, real estate, all of them? They are called as capital assets. So if I end up selling them, they are subject to capital gains. And there's a categorization of long-term and short-term capital gains. Long-term capital gains for property is if it is held for more than 24 months, right? So, unfortunately, if you sell a property while it is short-term capital gains, okay, it's taxed to the normal income tax rate slabs, and even worse, you cannot set off your capital gains by reinvestment in a property that we are talking of later. Okay, so that is something that you can keep in mind. Yes, can you set it off against short-term capital losses? You can set it off against short-term capital losses. So those again are nitty-gritties that you sort of need to go into. The second part of it is long-term capital gains, and if it is a sale, again, tax laws are complicated. You have laws change. Okay, so if it was before 23rd July 24, okay, you have an option to take a 12.5% without indexation, or 20% after indexation for inflation. Okay, so that is something that if the property uh, is acquired before 23rd of July 24. For sale of properties, acquired on or after 23rd July 24, okay, you will have only a flat rate of 12.5% without taxation. Okay, the good part is you have the lower rate, okay, but especially if the property is there for a long period of time, those are some of the instances when you may have a bit of an issue. So we're coming to the big and most important question here. Okay, now how can I save taxes on the sale of my property? Okay, so we have a couple of sections that we have. One is section 54. Okay, when it's an exemption when you sell a residential property. Okay, so that is something that you have, and section 54 is only for sale of a residential property. Okay, and if you sell a residential property, then you can reinvest the capital gains in constructing or purchasing a new residential property in India. Okay, so that is something that you need to sort of keep in mind. Okay, capital gains are invested in purchasing or constructing a residential property. So the simple point is, if I'm selling a residential property, okay, then if I reinvest into another residential property, I can set off the capital gains. So effectively, I am taking out the capital gains while reinvesting, to the extent of the investment being, in line with the capital gains. So what is the time limit? I can reinvest into a new property. Interestingly, not only 2 years after the sale of the property, but also 1 year before. Okay. Now, this is a very, very important consideration that I need to keep in mind. Okay. And a lot of my planning has to be around it because there are two aspects to it. One is the purchase of the property, one is the sale of the property. Okay. So, for example, if I've sold my property today, okay, I can reinvest it up to 1 years, I mean, 2 years after. Okay. Which means, up to something like 2 years, I can anything I invest into another property, I will get the benefit of. Okay. So on the other hand, there's also a benefit is even if I've sold it today, if I bought a property up to 1 year before, or my investments into a property up to 1 year before, even partially, okay, can again claim the benefit. Okay, so that is something that is kept in mind. Now, the tax laws also keep in mind, that sometimes the house is under construction. Okay, and it's not possible to reinvest fully within a 2 year period, right? So that allows you that the you can reinvest for a house under construction, which needs to be completed within 3 years of sale. Okay, if I'm selling my property today, okay, within 3 years, my new property needs to be completed. Okay, so that is these are the restrictions that you have and the limitations. Now, the other part of it which you need to keep in mind, if the property I've bought to reinvest in the capital gains is sold within 3 years, the exemption is withdrawn, which basically means that whatever the capital gains benefit that I got, it will sort of go away. Okay, it'll get added to the extent of capital gains that I claimed as an exemption. That will come in as a capital gains in the current year as an income. So I will request my team to run a poll out here. Okay, on what is the limit on the number of houses that you. Okay, so we'll give a few more minutes. Okay, so broadly, I think most of us have voted, and it's interesting. I think there's one house, there's two houses, and there's no limitation. Okay, so this is actually a trick question. Normally, they do this, you know, if you're writing a test or something. So, so actually, under Section 54, where you're reinvesting a sale of a residential property, actually, there's no limitation. Okay, so the limitation comes when you actually sell, another property, out there. Okay, so that is, something which is there, and of course, the poll, I will share the results. Okay, is a little off. Okay, so actually, no limitation is the right answer. So under Section 54, okay, there is actually no limitation out there. Okay, so I just wanted to, how many of us, I think we can just post that in the chat. How many of us want to reinvest our capital gains on the sale of a house property? Okay, or we are also looking to invest into, just post it on the chat. Okay, yeah, yeah. So we are finding, yes, a few of us are either considering purchase or considering, a sale of a property. And like I said, in both conditions, you end up having, the to look at, this particular section on how do you save taxes. So we'll just go back. Okay, so uh, the other way of saving taxes on your property is, Section 54 EC. And what is 54 EC? It's basically there are capital gains bonds. They are, available to anybody who sold a residential property and incurred long-term capital gains. Okay, so here the limitation is 50 lakh of rupees. Okay, is what you can reinvest into these capital gains bonds. Typically, these bonds are from government notified institutions like IRFC, REC, PFC, and NHAI. Okay, so all of these are more infrastructure companies. The government is trying to, encourage investments into infrastructure and give benefits to also the infrastructure companies, so that they can, add and build towards India's infrastructure, because they in turn will go and lend to companies in the infrastructure side. So that is something 50 lakhs you can take advantage of. However, it has to be invested within 6 months from the date of sale of the property. Okay. Or it's also true before, if the due date of tax filing of the income tax return is there, okay, it can even be earlier. Okay, so that is something that you may find that if you've sold a property somewhere, in something like Feb March, okay, you have to watch out for the second condition, which is before the due date of filing of your income tax return. Okay, now the not so great part is, these bonds are locked in for 5 years, and you basically have an interest rate of 5%, and that interest rate is also taxable. Okay, so that is something that you keep in mind. Now, here I will capture some of the other points, and also from our learnings on various case studies that we've had. Okay, so one of the aspect is, uh, when you're reinvesting under Section 54, okay, when you're reinvesting into another property, and because you have time up to 2 years, okay, from the date of sale to reinvest in a house, so and it could happen in phases. The government doesn't want you to benefit from, keeping it, investing it in equity markets and all of that, and taking advantage of section. So they're saying that these proceeds should be set aside into a capital gains account, scheme account with typically most of the PSU banks will have these. So if you've sold a property and you are likely to take time before reinvesting the capital gains into another property, okay, you have to within your due date of filing your return. So typically, the July August type of period, when your due date for filing returns is there. Before that, you have to open this account, and this account will again give you a certain interest. It's not going to be too high. Okay, and you keep it there, and every time you make payments for your property, then you make it out of this particular account. Okay, so that is the broad thing there. So we've had a lot of cases when people have lost out the tax benefit. Okay, because they thought, okay, I have 2 years. Okay, but they have not invested it before the due date of filing their IT returns. Also, and there always is a risk if it comes up for scrutiny, then it's very, very likely that your capital gains reinvestment is disallowed. Okay, so this is important to keep in mind because the tax savings may be substantial there, and if you've already gone and looking to reinvest, then you need to open the capital gains account scheme. Okay, that's the first part. The second is um, you know let's take an point, and what I was saying was you also planning to buy a house. So I'll capture both of the next 2 points together. So if you're planning to buy a house, you need to go back and see, is there some property that I can sell, and is there some capital gains that I can book? Okay. Of course, you can also use 54 EC. So for any other asset, if you have a capital gains, so it's important to say that if I'm buying a property, why not I look at selling another property so that I can set up the capital gains. Okay. And let me give illustrated in more simple terms as an example. Let's say, I'm buying a property for 5 crores. Okay. And I have my other house, okay, which I'm moving from and coming to this new house. Okay. It's a good idea for me to look at also selling that house. Okay. And the reason for that is, let's say if I have a capital gains of 3 crores on that original house of mine, okay, if I link both of them, right, and I use it as a reinvestment into the new house, then I will actually make a substantial gain. Okay, because this whole 3 crores of rupees or 2 crores of capital gains that I have get completely washed out instead of. Okay, so anyway, I'm buying a house. So let me look back. Okay, so these are the points that, and this is tax planning proactively. Right, so you can proactively go back and look at what are the properties you hold, including land and stuff. Right, so if I'm holding more than one properties, this is where I said you can reinvest. But I should keep in mind that if I'm buying a property and the sale is not a residential property, okay, then it comes under 54 EC, and in that case, I basically have, a restriction that I cannot hold more than one other property apart from the property that I'm buying. Okay, so that is which is effectively I can hold 2 properties and claim the tax benefit, including the new property that I'm buying. Okay, so that is the differentiation, and that's an important matter for you to also consider. Okay, so again, we've had a lot of cases out there. Now, can I invest into more than one property? Okay, actually, I can invest into more than one property. There are certain restrictions. If I remember right, it's about 50 lakhs into sort of property. I can invest. So if I've sold the property and I have a large capital gains, then there's a provision for me to be able to invest into 2 properties. But there is a value limit to the properties, and that effectively is not very reasonable and makes it a little ineffective. Okay, but this is a particular thing which is there. Again, when I'm saying property, I mean a residential property, because if you remember, the capital gains, is is available only if I'm buying a residential property. Okay. So in both cases, okay, I have to buy 54 and 54 EC and stuff like that. I need to be investing into a residential property. Okay. Um, and we've also had a lot of cases where people are inheriting properties. Okay. How do you do it? Or my parent is selling, but wants to give me the money that is coming out of it and split it to me and maybe my siblings. Okay, so there have been a lot of cases where people have come to us where they've inherited. Now, those you have to work a little carefully in terms of how you do it. If it's the event has already happened, then you can take your individual shares, and accordingly, there's a the cost is apportioned in the same ratio as what you have got in terms of your inheritance. Okay, so cost will be apportioned. The original cost and the of purchase date and cost will be considered for you when the capital gains when is computed. Okay, so that is something that is there. In some cases, like I said, the parent during one's lifetime wants to sell the property and distribute it. Okay, if the original holder is alive, okay, then the capital gains will actually be in their name. Okay, and the tax will have to be paid in their name. Okay, so the parent then will have to pay the tax in their own name and then do it. Of course, there's a provision where you can do a gift before. Okay, to the in that share to all the siblings, all the children that is of the parent. Okay, so you can do that before. So these are all a lot of nitty-gritties, okay, which people many times come to us after they have, done something. So my suggestion is, if you have some of those considerations, then come back to us and, we may be able to help you do a few things proactively. Come back before the event is, happening. Okay. We also have cases where if you're holding more than two properties, okay. So, for example, I have three properties, three residential properties. Okay, is the important consideration, not just property, three residential properties. Okay, and if that is the case, then or even two residential properties, then I need we have suggested people that you can do a transaction before. Okay, one is either you sell the excess properties above the one. Okay. The second option is an interesting one. You can also gift it. Okay. So there is an option there. So before you are doing certain transactions out there, if you look back at the details of it, you may be able to save a lot more taxes. Okay. Uh, Now it is like a question of should I invest in capital gains or should I not? Okay, so we have a calculator and you can again come back to us and we can help you with that. Okay, but when you sell a property and I have the option of investing in the capital gains bonds, okay, and if invest in the capital gains bonds, then you basically have a to look at what is the other alternate that I have. Okay, so if I'm comfortable with markets and equity and stuff like that, and typically the break-even point is somewhere around 10%. If I'm able to get a return sort of about 10%, okay, but we can compute it for you exactly. Okay, and we have a calculator for that. Okay, so if it comes approximately about 10% return, okay, then it's better off to not invest into capital gains. I pay the tax, the full tax that is there, and then I reinvest it into other avenues which deliver me better return, and that may be, more beneficial. The second point to consider is if liquidity is important for me. For example, for a number of elderly people, I've suggested just don't invest in capital gains bonds because that again locks it in for another 5 years, right? So if liquidity is important to you, then then you need not invest into capital gains bonds. Okay. Just a quick thing about Right Horizons. Uh, so basically, we are a niche wealth management organization, and our mission is to help our clients achieve their financial goals and provide an end-to-end solution, which is why we also look into aspects like this. How do you save tax on your real estate? And I think when you put all of them together is where it sort of becomes an important part. Where we are over 21 years in business. Okay. Uh, Basically, our services, we again try to cover the whole breadth of it. Okay. Right from advisory to wealth management, we have expertise in NRIs. We also have one of a very good and performing portfolio management company and service. Okay, we have a whole range of products, and they have been, right at the top in terms of performance. And how we differentiate ourselves is we try to deliver a superior risk-adjusted return. Okay, of course, a significant part of what we do is to, try and educate clients, and our belief is, that's the best thing that we can do to give back to society, okay, and help people, achieve their financial goals. We do a lot of educative sessions, a lot of articles and stuff like that to, help you take, better financial decisions, including this whole webinar series, which we do almost like one webinar a week, apart from all the corporate campaigns that we typically run. And we also have family office services. We provide, certain corporate advisory, including, helping, on purchase of companies and sale of companies, etc. As part of the overall. Uh, and that's all I had in terms of content.